a few minutes so I can make sure that people are already tuning in and ready for our broadcast today. Looks like we're live, and I just want to make sure we have some folks. So if there's anyone, excellent. It looks like we have a couple of people that are already tuned in with us. Good morning to Wayne and Peter, our two board members, and good morning and happy Tuesday to everyone else that hops on. Today is Giving Tuesday now, and if you did not know that, then we encourage you to find a nonprofit to help support in this time of need, especially as they're providing resources to a lot of community issues that we're facing. We have a full list of available nonprofits that are affiliated with our organization at westminsterchamber.biz. Organizations like Outdoor Lab, Jeffco Schools Foundation, Precious Child, and several others in our community and surrounding community that could benefit from you giving. Now, if you don't have funds to give, don't feel like you just have to give money. Really, you can give in so many ways by giving your expertise and guidance to them, giving some of your time through volunteer and service, or giving some kindness to them and everything that they're doing. So just keep that in mind, that as you continue your day, that you think of ways that you can give back to your area communities. And we are also happy to take your time as well, since we have a lot of volunteer options. I am Juliette Abdel, President and CEO of the Westminster Chamber of Commerce, and it is incredibly exciting for me to kick off our COVID-19 series for today. And I just wanted to share with you, if this is your first time hopping onto our Facebook page, please be sure that you like the page and that you follow the page as well. To my speakers, I'm digressing. Please mute yourselves if you're not speaking right now. But please be sure you like this page and follow us. We're also on a lot of other social media platforms, including Instagram and Twitter at Westy Chamber. And be sure to watch any of our other videos that we've posted since mid-March until now, from updates in the city, county, and state level. Those are available for you at any point in time. Please be sure to give us a hashtag replay. It looks like we have a couple other people that have hopped on. Dave Carpenter, howdy to you as well. And then we also have Councillor Seymour. Good morning, Westminster business leader. Good morning to you as well, Councillor Seymour. Thank you for tuning in. So I don't want to eat too much of everyone's time. We have two amazing experts, one of whom I work pretty closely with, and that's our board chair, Brian Dice. He represents Your Castle Real Estate. And then we also have Brett Powers from Popish Mortgage. And both of them are going to help us address the topic of realty and forbearance. So during this time of COVID, a lot of us are either struggling with mortgage payments or thinking and considering buying and selling of home, the process, valuation, and various other factors like that. So we've decided to partner with two of our experts to bring some answers to you and some information. As you're watching, if you have questions or comments, please type them into the comment section so we can address that. Give us a thumbs up if you're loving the content and let us know how we're doing. Thank you, everyone, for tuning in. I'll turn this over to Brian to get us started.
Okay, thanks, Juliette. Appreciate this opportunity. I apologize to everyone watching. I thought this was going to be a great location to do this from. It's a little bit dark, but it's probably more important you hear me than see me. If anyone who's seen me would agree with that. So a little bit about the real estate market, just a couple of topics I thought I would touch on, primarily because these are the primary questions that I'm getting these days. The first one is a common question from people in any market, but particularly in a market like we have right now with everything that's going on with COVID-19 and shutdowns and the protocol that we have. So that question is, what's happening with property values, right? Everybody, whether they're thinking of doing something in real estate or not, is concerned about, what do my property values look like? Are those going to hold? So real estate, property values for homes, and that type of thing is the same as anything else in the market. It's a basic function of supply and demand. So economics 101, right? So I think most people have been around the Colorado area for the last few years, are pretty well aware we have a high demand, and we've had a very low inventory, so kind of a shortage on supply, which has been driving up our valuations of our homes. So what's happening right now in this market? Great question. What we've seen has been kind of interesting because obviously the activity is suppressed compared to what it would normally be this time of market. This is one of our hottest seasons into the early, spring and early summertime. And we haven't been able to have the same kind of activity that we normally would for showings and that type of thing, obviously. But what's interesting is about the same number of sellers, percentage-wise, have pulled back as buyers, and so our demand has remained pretty similar. So we have been doing business. We're being careful or trying to be careful in our industry to, to tell people it's not business as usual, but we are in business and we can help you if you have a need to buy or sell a home. So as we progress through this market, what business is getting done? Buyers are still paying market rate prices. Those prices are holding or even going up slightly still. Buyers probably don't experience quite as much competition. We're not seeing as many multiple offers like we were seeing before, but they are still paying market rate prices, and those property values are holding. And something that might help a little bit, I've shared this information a lot even before the COVID thing had started with people, because questions come about whenever there's talk about recession, which certainly, with the kind of economic shutdown we've had in the last several weeks, couple of months, I'm sure we're looking at something along those lines. We had a visual we're going to try and share with you, which wasn't cooperating, but I'll just kind of talk you through it real quick. So over a long period of time, in the last 5 recessionary periods, 3 of those 5 property values have actually gone up. And in 2 or 3 of those time periods, gone up as much as 4% or more. And one of those that nationally showed a slight drop, about 1.9%. Actually, in Colorado, we still had over 5% appreciation during that period of time. So the only time that we've really had in Colorado a drop in prices, which everyone remembers all too well, if they've been around enough years, is a little over a decade ago. In our last recession, property values dropped quite a bit. It was fairly dramatic drop. And that is because that recession was specifically caused by, oh, there you go. Good job, Juliet. Was specifically caused by the mortgage and real estate industry. So we had watered down guidelines for people qualifying for mortgages and a number of other things going on, that laws have been passed and rules have been made, and those things no longer can happen and no longer apply to this market. So there's no reason, unless this turns into something, I know it feels pretty bad right now, but unless it turns into something much more significant than what we anticipated it would be as we're coming out of this, there's no reason to believe that property values are going to drop, and they probably will even continue to increase at a moderate rate. So hopefully that puts people more at ease with that aspect. The other thing I wanted to talk about, and I'll try and do this as succinctly as possible because I want to make sure Brett has plenty of time for a very important topic that he's going to talk about. But people are also asking, what does it look like if I do want to buy or sell right now? Is it safe? And am I going to be able to get the best value for my property? What are you guys doing? So first of all, as in any time like now, there are innovations that come forward that have maybe been lingering in the background that we haven't paid as much attention to, but now we are. So for example, we've been doing virtual showings. That's all we could do in the last 3 or 4 weeks. And so there's technology like Matterport, which allows us to take someone virtually through a property, and it's very much like you're in the house. So if you're familiar with Google Maps, I think it's the Street View version where you can take your mouse and kind of drive down the street, and then you can turn to the left, turn to the right, or spin around, and you can see everything around you. Very similar type of a concept. And so we've been doing showings virtually, and then once people go under contract, they're actually allowed by law to be able to get in to see the property in person. Of course, we have things in the contract to allow them to get out of the contract if they don't like the property once they get there without losing earnest money or anything like that. That will continue to be there for any buyers who are not comfortable to get out and look in person, or sellers who don't want to have people coming through their home. In addition to that, as we are getting back now to where we can do in-person showings, and it looks like within about a week, most counties, unless they extend again, will probably be in pretty much in alignment with the rest of the state, allowing in-person showings. In addition to the basic, obvious things that we're required to do as far as social distancing, keeping the 6 foot or more distance and that type of thing. Everybody has to wear masks. Anyone going into a property is required to wear masks and gloves. I know the gloves are a little bit of a controversial, is that better or not? But certainly the gloves have to be changed out each time we go into a new property. The listing brokers as well as the buyer brokers need to have all of the safety gear required. So hand sanitizer, disinfectant, that type of thing. We're scheduling showings with at least half-hour gap in between, so that property can be disinfected between each time it's shown, and those type of things. So, an abundance of caution and a little bit of common sense goes a long way, right? And there are a number of things that we are doing that we can keep people safe during this time and be able to actually go physically look at properties and do business. So hopefully that helps, and I will turn the rest of the time over to Brett.
Thank you, Brian, and I thank you so much for touching on a lot of the information you shared. It's been interesting to watch how some industries are not as adversely affected by COVID-19. I think real estate, especially, transactions are still happening; they're taking place. We're just thinking, how do we adapt and do that in a way that's compliant with what we're able to do from state to county and even some of our local municipalities. Looks like we have Dennis Swanson. So Brett, we have a fan of yours that's on here. We have Parker Brown and Richard Chamberlain. Hello to you guys, and Kaylee Kemsel as well. Hi, Kaylee. It looks like Chris McGrath has shared with us that he's just saying his hello. Hi, Brian, Juliet, and Brett. And Bill Stowe. This is my first time seeing Bill on one of our lives, so thank you for hopping on, Bill. Hopefully this won't be the last time. I'm sure you're connected to one of these gentlemen, and we'd love to have you back. This is a funny. Counselor Seymour gave a good morning to Papa Brett Popish. And if I can I pick on you, Brett? And if I can,
go for it.
I said, last time I saw you had hair. So clearly there is a correlation between the two. Yep. Joshua, thank you so much for hopping on as well. He's sharing, thanks, Brian, and great content. We just so appreciate you for tuning in. So with that being said, if you've just hopped on and have started watching with us, please be sure that if you have comments or questions that come to mind as one of our experts is speaking, you type them into the box so we can display them. We like the feel good, and we also like to provide you with some answers to your questions. So type those in as those come across. Brian, I'll have you mute your mic, and then Brett, I'll have you go ahead and get started.
Fantastic. So thank you for setting this up, Julia. The hair situation, I think, is a combination of fatherhood and the whole COVID-19 situation. We should just rename this podcast to the Bald Buddies rather than Brett and Brian, because, that's just what it is, right? So real quick, for those out there that don't really know me, so my name is Brett Popish. I'm actually a top producing branch manager with Universal Lending Home Loans, and Popish Mortgage Group is our branch within Universal Lending. I've been in the mortgage industry since 2003. So Brian alluded in his brief conversation there about, the last time we saw a recession back in 2008. I came through that, and I'll be honest, a lot of what we're seeing in the financial world right now, as far as some of the tightening of underwriting guidelines, increased requirements of credit scores, lowering of debt to income ratios, things like that. That's very reminiscent of what we saw back in 2008 to really 2012. We're getting back to a lot of the more tightening and more responsible lending, if you will, because the whole goal of everybody in the mortgage industry, as well as everybody in the real estate industry, is to provide sustainable home ownership, right? We don't want to put somebody into a home that they can't afford. So really, it's all about sustainable home ownership. Today, though, I want to really talk about forbearances. You know, there's a lot of headlines out there, you know, politicians and news media come out and they have a quick 1-minute snippet of a forbearance, and they really talk about the highlights, but they don't really dive into the details. So here's what a forbearance is in terms of a mortgage. All a forbearance means is you are pausing your mortgage payments for a certain period of time, whether that's 3 months, 6 months, whatever you as the homeowner and your loan servicer, the mortgage company, has agreed upon. Now, because it's a pause, what they're going to require, now I will preface this with a caveat that every mortgage lender out there, every servicer, so the servicer is who you make your mortgage payment to, is going to be very different in terms of what they require for repayment. Many of them are going to require the repayment to be in one lump sum at the time the forbearance is over. So let me kind of give an example. Let's say for a moment that you have a $2,000 a month mortgage payment and you go on a 3-month forbearance. So that's $6,000 in paused mortgage payments, okay? Come month 4, not only do you owe the $2,000 a month mortgage payment, but you could also end up owing that $6,000 in mortgage payments that were paused during that forbearance. Now, a lot of people say, well, what good does that do? If I can't make my mortgage payment, how am I going to make up 4 mortgage payments at one time? And I would agree with you. That's going to be very difficult for those folks that are in a hardship and that just really can't afford to make those payments. One of the main questions that come about, though, is, well, why can't they just tack these payments on to the very end of the loan? And the reason for that is if they tack the mortgage payment on to the very end of the loan, you effectively modify the contract. When you sign the note and then the deed of trust secures the note to the property, that's a contract. So between you and the bank, you and the lender. So when you tack those mortgage payments on to the end of the note, you're modifying that contract. Well, we can get into the weeds of the secondary market and all this sort of stuff, but I'm trying to simplify it in that the mortgage company, your mortgage servicer, whoever you make your mortgage payments to, is still required to pay the property taxes on the property, to pay the homeowner's insurance on the property, as well as to pay the principal and interest to the investor on Wall Street that owns that mortgage-backed security. Now, if these servicers get too many loans into forbearance, they end up having a financial hardship themselves. And what's important to know is 60% of all mortgage lenders out there are non-depositories. So a depository is your Wells Fargo, your JP Morgan Chase, your US Bank. Universal Lending, for example, we're a non-depository, meaning we don't do banking, we do mortgage lending. So if 60% roughly of all mortgage lending is done by non-depositories, one can imagine the financial hardship that all these lenders are going to be seeing with all these forbearances, okay? What I'm here to tell you is if you have the ability to make your mortgage payment, I highly recommend doing so because there are going to be consequences to these forbearances in the future. So let's kind of break this down a little bit. So first and foremost, when they came out with the forbearance idea, they said, hey, anybody can apply for a forbearance. We're not going to require you to demonstrate a hardship at this point in time to expedite the forbearances, because we all knew what happened back in 2008 with short sales and loan modifications and all that sort of stuff. It took forever. They wanted this to be an instant fix or an immediate support for homeowners. So with that said, anybody can apply for a forbearance, whether you're in a hardship or not. And the challenge is, or the ramification is, if you apply for a forbearance and you're not in a hardship, you're going to have a difficult time in the future getting a new mortgage. So if you're trying to refinance at a future point in time within the next 12 months, for example, or if you say, you know, I want to sell and I want to move up, want to buy a new loan, every lender is going to look at your past mortgage history, your payment history in determining whether or not they're going to grant you a new mortgage loan. So one of the unintended consequences of people doing these forbearances is you're going to put yourself in a more difficult position to get a loan in the future. Every lender is required to make sure if you're going through a refinance, we have to show that you've made the mortgage payment on time for the last 12 months consecutively. So let's pretend for a moment that you do the 3-month forbearance that I talked about at the beginning. Once that forbearance is over, not only do you have to catch up those mortgage payments, you're going to have to make 12 on-time monthly payments before you're going to be eligible for a new mortgage loan. You see how that could be a grave unintended consequence for somebody that needs to refinance, or for somebody that needs to sell and purchase another property? These forbearances really should only be for those folks that are in true financial hardship. You've been furloughed on your job, you've been laid off, or you've completely been fired, right? Though that's where the forbearance really makes sense. Otherwise, you're really creating an issue later on down the road for yourself by doing a forbearance if you don't need it. So my PSA, if you will, my public service announcement today is, if you have the wherewithal, if you have the ability to make those payments, keep up on those and do that, because you don't want to put your credit in a position to where it's going to take years to get out of that. I do want to bring up a couple statistics here real quick that I researched today. There are currently let me give you the percentage and I'll give you the numbers. Right now, 7.54% of all mortgage loans in the US are in forbearance. Now, from a percentage standpoint, you might think, hey, that's not that many. That's over 1 million homeowners in forbearance right now. And they're projected by July to jump to 15%. Think about that for a moment. Now, the more people go into forbearance, I talked about how, the taxes, the insurance, the principal and interest is still owed, all that sort of stuff. The more people go into forbearance, the greater of an economical hardship or an economical strain that's going to be put on the overall economy by not having that money coming into those banks and all that money being paid out. So again, the forbearance should be for those folks that absolutely need it, not just because, hey, I don't feel like making my mortgage payment for the next 3 months, so I'm just not going to do that. Off of the forbearance piece, I kind of want to echo what Brian said, if I can. As I mentioned at the beginning, I've been in this business since 2003. I've seen the ups and the downs during the financial recession that we had in 2008 to about 2012, 2013. And what I'm seeing in our business right now is I'm actually seeing an uptick in people getting pre-approved. I'm seeing a lot of first-time home buyers coming in the market wanting to get that pre-approval done with the expectation that they're going to be looking at homes come June, July, August. That right there, so that's the demand. And that right there is a real gleaming light of positivity, quite frankly, in the economy, because if people are still anticipating buying, at least in our market here in Denver and more locally here with Westminster, I really feel like our home prices are going to stay steady to slightly increasing based on that demand. And I know, Brian, you and I talked about that last Friday at length as well, but I would just echo what Brian has to say with that.
Well, thank you, Brett. I had misheard you earlier about the forbearance at 75%, and I was like, wow. So we fixed that. So it's currently 7.5% with an anticipated or projected by July of 15% forbearance. You shared a lot of pretty great statistics and information. We have several folks that are, commenting they had no idea about how that forbearance truly works. And, Brianna over here shares that it's good to know that whenever you are going on forbearance, what effect it might have in the long run. We also have, I know you mentioned, you've been doing this since 2003. I know you have decades of experience. So we're going to throw back to the BALD comments earlier. You guys have decades of experience between the two, great content. It looks like we have several people that have hopped on. Hello, Corey and Robin. Thank you for tuning into our broadcast. This topic is focused on realty and forbearance in the time of COVID, how home buying and selling has been affected, if in any way, and how mortgage, what you can do if you are in need of forbearance or you are considering it, the implications that it might have in the long term. We have a question from Melinda, and I think this question is more directed to Brian. Is it a good time to buy a new house, or would later be better?
So, my general answer always when people ask me about buying or selling is, if it's time for you to buy a house, it's a good time. Now, I get that the context of this question is, should I move forward now or should I wait a little bit longer? Well, one thing I can tell you is, although property values are holding very well, like we talked about before, I've heard a lot of stories about people getting skittish and backing out of new construction homes that they were under contract on. So I have a feeling the builders may be sitting on more inventory than they're used to right now, and there may be some deals that are going to be offered out there. So if you're comfortable with it, as far as getting out and about and taking a look like we talked about in a safe way, yes, I would say now could be actually a very good time to look at buying a new home.
Excellent. And then, you know, some of the comments that Brett made earlier about forbearance and how that affects, Josh commented over here, you know, it's good to know about real estate agents to understand that forbearance may not be able, people who go through forbearance may not be able to buy another home because of CARES. You know, I think that's pretty a really good synopsis that you shared, Brett. You know, whenever we're talking about deferring or we're talking about forbearance, whether that's on home ownership or even business owners that are trying to think of ways that they're deferring their rent and things like that, there's another side to it, and that's the person that actually owns that property and their expectation of having to make payments. And if they're not receiving that revenue, then they're not able to do that as well. So there's the balance of those two. I thought it was interesting whenever you shared that this does reflect on your credit moving forward. So I guess a follow-up to this would be, is there not a way that it's actually identified as a forbearance in a time of a pandemic or the present situation that we're in? Because keep in mind, this is not an everyday type of situation that people are facing.
Right. So yeah, that's a fantastic question. What the credit report is going to show, your credit score most likely is not going to be impacted, but the credit report is going to have a comment that says mortgage loan currently in forbearance or was in forbearance during a specific date range. Mm-hmm. So we as a lender, we're going to say, okay, well, we know that that was during the time of COVID-19 and we understand that. However, the underwriting guidelines still state that if there is a current mortgage, so let's talk a refinance for a moment. If we're doing a refinance, the underwriting guidelines currently, as of today, May 5th, happy Cinco de Mayo, by the way. Currently, the underwriting guidelines say if you're going to do a refinance on a mortgage, we have to ensure that the most recent 12 months of mortgage payments have been made on time. And Fannie Mae and Freddie Mac and FHA haven't come out and addressed that, nor have they changed those guidelines. Now, underwriting guidelines can change tomorrow. They could change this afternoon. So, you know, what I might say right now could change if they decide, hey, we're going to just take the forbearance piece out of it entirely for future mortgage loans, which quite frankly, all of us mortgage lenders are hoping, because just as you said, this is not a normal everyday thing, right? This is something that none of us have ever witnessed nor experienced, right? The one thing that I would say, if you are in a position to where you need that relief, if you need a forbearance, please don't call up and talk to even your local mortgage lender, me, your local real estate broker. You really need to contact the mortgage company that your mortgage is being held with and have that frank discussion with the lender themselves. Because as I said earlier, every lender is going to have different requirements. They're going to have a different process, and you need to have that open line of communication. You know, one thing I would say is, you know, just because your neighbor might have gotten a forbearance, don't necessarily take the advice from your neighbor to make your financial decision. You need to be sure to talk to the professional that you bank with or that you have your mortgage held with, and make sure you're getting the direct answer from them, because one person's situation is vastly different from another.
And we've got several questions that emerged just from some of our latest feedback that we've given. So we're going to go through these 3 questions and then close out. If we get more questions, we'll have our experts provide you answers, and then we'll also share their contact at the end so you guys can connect with them. Our next question came from Brian. What advice would Brett and Brian give those thinking of leveraging their home equity to fund or save their businesses during this pandemic? And that's an interesting approach.
Do you mind if I take this first and then you can touch on this as well, Brian? Perfect. So in order to access your equity right now, you really would have 2 options. One option is going to be to do a cash out refinance, or the other option would be to pull out a home equity line of credit. Okay. What I will tell you, both of those options are still available in many cases. However, as I alluded to at the very beginning, a lot of mortgage lenders are tightening up guidelines, and some of the guidelines that are tightening up is surrounding the cash out refinances, because what all the banks are fearful of, and when I say banks, keep in mind I'm lumping Fannie Mae and Freddie Mac into that category for purposes of this conversation. But what all the banks are fearing right now is mortgage loans performing in general because of the unknown. We don't know how long people are going to be out of work. We just don't know. And so on the cash out refinance side of things, you're going to see a tightening of restricted loan to value ratios, or a tightening of how much equity you're going to be able to access. Okay, so just be prepared for that. Also, you're not going to get the best interest rates on a lot of these cash out refinances because of that fear of future performance. In regards to home equity lines of credit, you would really have to talk to a local banker, somebody that works for a bank regarding that. That's not something that we do. However, I am hearing stories, and again, third-party stories, but I am hearing stories of a lot of banks tightening up and lowering the maximum amount of equity they're going to allow somebody to borrow. Mm-hmm. But one question you would have to ask yourself, if you're a small business owner and you're trying to say, okay, do I leverage my personal residence to keep the business afloat, to pay employees, things like that? That can seem very noble, and I'm not here to judge on that. I'm just bringing up something as food for thought. You really have to ask yourself, do I want to leverage my personal residence for my business, right? The one thing that I would caution everybody on is leveraging their personal residence to a point that they put themselves in a greater financial hole potentially by accessing that equity unnecessarily. And I know Brian and I talked about it, so I'll kick this back off to Brian as well and let him add his insights into this also.
Well, yeah, thanks, Brett. I would just reiterate that last point that Brett was making, and this obviously isn't, particularly a real estate related question for me, but more from a business standpoint. Taking money on the personal side, out of the equity that you have in your home at a time when maybe you're struggling, your business is struggling, and then if ultimately the business situation doesn't go the way that we hope optimistically that it will, if you haven't kept the personal and the business separate, and there has to be a business BK file or something like that, you've now taken equity out of your home that you will not be able to get back. So I'm an advocate for keeping those separate as much as possible.
So great answer for both of you, and food for thought for anyone that was considering that. This question relates to refinance. Is it a good time to refinance? And then before you answer that, Parker has also commented, what are the current rates? So is it a good time to refinance, and what are the current rates?
Okay, so I'll answer the first question as to whether or not it's a good time to refinance. It absolutely very well could be. However, I always like to preface this by saying it depends on your current situation with the mortgage you have now, right? If somebody's currently at, 3.75% a 30-year fixed, sure, you could get maybe a little bit lower on an interest rate, for example. However, you have to look at, and a lot of the radio advertisements kind of annoy me, quite frankly, because they don't really dive into this. And obviously there's a reason for that. Their goal is to get people to call in. But what I like to do when I talk to clients about refinancing is say, okay, let's take a look at the current loan you have today, and then let's compare it side by side to a couple different refinance options to see, okay, is there monthly savings to be had, number one? Number two, what is the rate of return on that refinance? And what I mean by that is, how long is it going to take you to recoup the cost of a refinance? And then the third question I always ask is, how long do you anticipate staying in the property? And the reason that's important is if you think you might want to sell the home within 2 to 3 years, I'm probably going to tell you not to refinance, because you're not going to be in that home long enough to realize the savings benefit or recoup the cost of that refinance. Because every refinance is going to cost you. It's either going to cost you in years, it's going to cost you a little bit in equity, or it's going to cost you in both. So to go back to the question, is it a good time? It's a very good time for many people. I don't want to send out a blanket statement that it's a good time for everybody, because your current situation might already be in a good shape to where a refi doesn't make sense. Now, as far as interest rates are concerned, this is a tricky one. And the reason I say it's a tricky one, because anytime I quote an interest rate, I have to also quote like a paragraph long disclaimer associated with this. Thank you, Dodd-Frank, for that. So what I would say, I'm going to give you a range. If we're talking 30-year fixed rates, 30-year fixed rate mortgages, you're probably going to be looking low to mid threes, depending upon the type of refinance you're doing. And what I mean by type, rate and term refinances are going to be vastly different from that of cash out. The other thing with interest rates that you have to be aware of as well is your interest rate is determined by the type of refinance, what I just talked about. It's determined by the type of property you have, as well as your credit score. So rates are incredible right now. And quite frankly, in some cases, they're better today than they were back in 2008. However, for me to quote a particular rate as a blanket statement, it's really not a good thing to do, just because there's so many factors that come into play with that. This is where I would say talk to your favorite mortgage lender, hopefully me, and we can look at your specific situation, and I can give you a more accurate interest rate quote and see if it makes sense.
So on that note, Brett, if you can provide us with the best way to reach you.
Yeah, so the best way is my direct phone number. That is 303-668-5891. You can also find me on Facebook. You can message me through there, or my email is bpopish, so that's BPOPISH @ulc.com.
Thank you, Brett. I appreciate it. And Brett's email is also typed into the comment section. That is his phone number available to you. Brian, if you can provide us with the best way that we can have individuals that may be watching this later on, or you've vacillated over everything that you've heard, and so now you have questions to reach out to you as well.
303-503-6980, or email at Brian@BrianDice, make sure you get the A before the I.com. Brian@BrianDice.com.
Thank you, Brian. So there's Brian's number, and his email is in the comment section as well of this video. Thank you, Jessica, for your comments as well. And before I wrap this up, I just wanted to kind of take the time to thank both of our experts to kind of hop on this morning. I know on short notice, they accommodated for me and pulled some information together that I hope you all found of value. If you're watching this on replay, please comment and let us know with a hashtag replay. And if you've been tuning in all this time, we so appreciate it. Be sure that you come back and see us tomorrow at 11 a.m. Tomorrow's topic is focused on our Dine Local campaign that just ended. Who won? We'll announce, but we'll also share with you a couple updates from the Chamber's lens, what we're doing or have done since our last update in wake of COVID. So appreciate both of our experts. Jenna, it was great information. You should have brought in your baby onto this broadcast, would have made it a lot more lively. But thank you to everyone that was tuning in with us, and to our expert speakers as well. I hope you all have a terrific day, and please do not forget that it's Giving Tuesday, so consider supporting some of our area nonprofits. Bye, everyone.